Good morning, Mark Soderberg with ADM Investor Services with your morning ag market outlook for Friday, January 3rd. Well, all right on the screen here overnight as prices are lower across the board. Corn right now is about 3 to 4 lower, beans 8 to 9 lower. Both products are down $6 to $7 in the meal, while oil prices are steady. Actually made its way back to unchanged. Wheat is down about 4 to 5 cents. After plunging yesterday, palm oil prices did stabilize overnight, rebounding about 1%. Yesterday afternoon, we got a lot of data out after the close. Census crush data for November showed 210 million bushels of beans were crushed. That was at the high end of the range of estimates. While down 2.7% from the all-time record high in October, it was still the second highest crush figure ever. And now 3 months into the 24-25 marketing year, cumulative crush has reached 612 million bushels, up 6.3% from a year ago versus USDA forecast of up 5.4%. So with crush capacity expected to expand even further in 2025, I would look for the USDA to raise their crush estimate about 10 to 20 million bushels in next Friday's USDA WASDE report. Along with the higher crush, however, we did see bean oil stocks jump 8.5% to 1.612 billion pounds, well above expectations for them to decline to 1.42 billion. So today, the stocks data yesterday afternoon did seem to confirm what perhaps the market's been telling us, and that bean oil stocks are not near as tight as initially feared. Another usage data, corn used in the production of ethanol in November. That did slip to 465 million bushels in November. In line with expectations, the October figures were revised up just over 6 million bushels to 467 million bushels. So we continue to see that trend where the previous month's data is revised higher. Cumulative usage in the first quarter of 24-25 marketing year has reached 1.38 billion bushels of corn. It's up 2.5% from a year ago versus USDA forecast of up less than 1%. So I would look for another 25 to 50 million bushel increase here. Speculative traders yesterday, healthy sellers in beans, fairly quiet everywhere else. We did see a big jump in corn open interest yesterday, up almost 18,000 contracts. Export sales later this morning. The CFTC report is being delayed until next Monday, given the New Year's holiday. Weather-wise, conditions in South America about the same, remain rather dry looking out to next week to 10 days across central areas of Argentina into southern Brazil. Crop stress is on the rise here. Frequent rains continue across central and northern portions of Brazil, keeping crop conditions there relatively high. Soybean production estimates in Brazil seem to be trending higher, now above the 170 million metric tons versus USDA forecast of 169. The jury's still out, though, in Argentina, where plantings there are really about to wrap up. In the U.S., much cooler conditions across the central part of the country, with a major winter storm expected to bring pretty heavy snow from eastern plains across the southern Midwest this weekend. Overnight, March corn pretty much matched yesterday's range. We are extending the downside now. We do have support at 451 and a quarter, resistance at 468. March beans so far holding above that $10 figure and the 50-day moving average, which is at 10.01. March oil is consolidating within yesterday's range and above the 40-cent per pound level. Indonesia has indicated it will take about a month and a half for them to be fully operational with their B40 blend of diesel, providing some clarity to yesterday's confusion. March meal finding support here just below the market at 311.30, and wheat just continues to grind sideways, unable to generate much lift here on short covering. So thanks for listening, everyone. Have a great Friday.